Thank you, Sean. All right, welcome. Happy Saturday. Again, as always, I'm so pleased to be with you. Happy to spend my Saturday with you. And welcome to another episode of Smart Investing, Market Analysis. And as you could see, exciting weeks we've had, and I believe there will be more to come. And I don't believe it's going to end on election day, but at least it will be not dull. So let's dive in and start our review. What we're going to do this week is basically, as always, briefly we talk about the economy. As you know, there's a lot of other things that are happening, but as always, the economy is forefront, but a lot of other side notes. Uh, then we dive into the markets and we spend quite a bit of time on the markets and the lesson of the week. I thought it's a good idea. Maybe every week we come up with some couple of ideas that I thought it might be helpful for your analysis and maybe idea for the next week. And the trade of the week, we will work on some of the trades that I had last week. Again, it wasn't dull week. And I thought with that in mind, I will also make some suggestion. Again, um, I'm not suggesting as far as the big picture, some ideas that you could use on your own. You can do the more research on it. And hopefully it will be productive ideas and profitable as well. Um, so with the economy, basically, as you know, that first of all, there's a lot more political environment now with basically what happened last week with the president's COVID situation coming back, the stimulus package, which has been the kind of a forefront, but obviously, as you know, on Tuesday, President tweeted. So it's been back and forth. The Congress wants to get back on the campaign. So there's been back and forth with the Treasury Mnuchin. So it is a lot going on with the elections coming up. The question is how far this stimulus package will go. So once we dive into the markets, you see the markets obviously last week when we discussed it, they were still working on the package, and then the president news had come up on Thursday. And what happened was there is this back and forth with um, House Speaker Pelosi and Treasury Mnuchin going back and forth, working on the numbers. The perception is, this is again my perception, as you can see, the markets think they were all positive. The markets came up very nicely last week, thinking that something could happen. And then obviously over the weekend, again, the president said, you know, they're willing to work. Maybe it's a gut feeling. I think basically that we are not going to get anywhere. We are so close to the election. Neither party wants to do something, although you would think the common wisdom will tell us that in July they would have done something because there's just so much need. But I think this is a political weapon. I mentioned again, if this was not an election year, I think things actually would have been done it would have done more smoothly, but because of the politics, this is where we are. So in reality, the thought would be, from the election point of view, is that whatever party gets in, they are going to have big package. Now, the odds are right now between Goldman Sachs and JP Morgan and everywhere else, you can see now the talk is, oh, you know, if Vice President Biden becomes president, the markets will react very positively. So what is happening now, basically, in reality, it's market is taking that into account, and they feel it's going to be much bigger stimulus package if the Democrats are in charge. So you will see with the analysis of the markets, how different sectors are reacting. As always, again, because of the continuity, I like to go over what we had, the jobless claims. Now you can see some of the numbers were better than the previous one, but not as good as expected. It was supposed to be 828,000. Jobless claims was 840. We are at 10.9 million. There's improvement, but states like California, they have put a freeze on the unemployment. So there are these things that we are watching. So there's a lot of, again, self-employed small businesses. The numbers don't show here. But the mood is a little different, and you can see the retail sales are a little improving. There's no hope for the when we look at the, for instance, the movie theaters, and then also the flying. So those are the things that, as far as people from box office to flying, that's going to take quite some time. Yesterday, I had my first soccer practice. I'm coaching 14-year-olds, and it was really strange. First of all, we had to abide by all the rules. The 10 feet apart. So each player really is doing things on its own, and they cannot touch the ball. They cannot touch anybody else's soccer ball. They cannot throw. No goalkeeping. But the kids were really happy to be out there. I think the public is ready. It was a beautiful fall day in Southern California, and we had great time, except, you can't really do a lot with at this stage. They really want to have team plays, scrimmages, games, so it was a little difficult, but you could see it was really nice to see out there. And I thought this would be a good excuse for me to get back a little in better shape, because I'm going to be running with these 13-year-olds, and it's going to be fun. Unfortunately, I can't do much with them. I can't even get close. So it's just like, let them do what they can do. We did some passing. And so we are, again, strange world, but hopefully in the next few months, regardless of who gets elected, we will have something concrete so we can get back to our normal life, even though some of the old norms are out, and new norms probably going to be what the norms are going to be. So basically, again, with the economy and the elections, we are going to be talking more again as we get closer. Obviously, right now, the markets are taking it kind of resigned to the idea, or actually they're positive about the idea of the Biden and Kamala Harris ticket. But I would not rush to that. I think there's a lot behind the scene that we don't know, and I'm not judging that as far as, so basically just be on your toes as far as the markets go. Be really, do your due diligence and just be prepared, because what I've seen in the last almost 40 years, I've seen the political arena, a lot of things do happen. But having said that, you could see this was one of the best weeks that NASDAQ had in a while. And all the markets actually, they kind of followed the same pattern. They were up nicely. Dow Jones was up 3.2, S&P was 3.8, and NASDAQ was 4.5%. So it was a very nice rebound, and from the doldrums of September. And in a long run, when we look at, we see that every sector, every part of the indexes, they were all up nicely. So even defensive segments like Dow Jones Utilities, they were up 5.2%. And we look at the Russell 2000 was up actually 6.38%. And we've talked about this last few weeks, what is happening, what kind of a rotation is going on. S&P was up nicely. So it was overall, it was a pretty nice week, and we want to dive in to see even more what is going on. Um, and then we look at the advanced decline line. Again, it was pretty positive. The dollar is the key. The dollar was down a little bit. So, and we will discuss the dollar a little bit. So, basically, then we look at the crude oil. It was up a little bit, actually nicely, but we will, I will dive in more into analyzing crude oil. And gold was up a little bit. It had a, in the midweek, there was some nice, on Friday was pretty nice actually. So let's look at the sentiment. Again, you recall in September, we had this almost 1.2 euphoria, and you could see how it kind of played out. Now we're getting back to more realistic view, although there's still, you know, we are above the actual neutral zone, but it's much better than what it was. So when I look at the sentiments, and we talked about like the exit strategies, there's just so many of them, from AAII to investors sentiment to, there's you know, we look at McClellan oscillators, and I think with these, I always look at for the really extremes, and that's where you it's like the most profitable trades, when you go to the extremes, and that's where they work, because it's the you know, again, herd mentality. So when they're averages, they don't really give us much message with the put call ratios. When you look at the trend, so these are the things that you know, September was a perfect time to look at this and say, you know, we got too much euphoria going on. Or you look at March, you see there's just so much panic. So the same thing, we look at the fear and greed, like beginning of September, if you recall, it was almost 78. Last week was about 40, 40, and then this week we're at 55, which is kind of neutral. So these are the gouges I use. Again, I'd rather look at the extremes. Now it's just more of a normal, it doesn't give us much message. But as you can see, that all the sectors were strong. And interestingly enough, like the energy, and I think because we also had the hurricane Delta, and we had again, there's a lot of movements in different sectors. So from the financials to technology to energy, everything was pretty positive. The thing is, even so far year to date, and we will see energy still down 47%. So we have out of 11, we still have in this situation, 5 sectors are still in the negative. Obviously, our biggest winners are the technology and the consumer cyclical, for valid reasons, as you know. So there's just so much consumption going at home, and also because of the using the technology. So with that in mind, let's look at, I'll start with that in S&P. Let me start with the Russell 2000, which it has had a nice movement. And with Russell, if you recall in March, when we were talking about, if you want to have a real recovery, it will be coming from the small stocks, small cap stocks. And it looks like the money is flowing to smaller cap stocks. After we had this support at 100-day moving average, the money has been going more towards, which are, there are a lot of financials, there's a lot of non-technology stocks. So although Friday they were laggard, but still there's this money is moving, and we want to see why. Why is the money going toward now the Russell 2000, which has been the big lagger? Now the idea is there's a lot of industrials in the Russell 2000, and what is happening with the understanding of maybe, again, the favoritism as far as the markets think, maybe because of the big lead that Vice President Biden has, there will be more spending, there will be more, again, green and alternative energies. There's going to be a lot more money coming, stimulus package. And then obviously there's a concern about the corporate tax cuts, which, being going higher as far as the corporate tax is going higher. So it seems like the technology and financial will favor more a Republican, but more of a cyclical and economic sensitive, and then infrastructure and again, alternative energy will favor, and managed cares will favor the democratic side. So it seems like that's where the market is trying to tell us. The thing is, though, and I will, once we look at some of the more unexpected move, you will see that the, the volatility of the daily has increased. And what I mean by that, this is the NASDAQ. So you can see the NASDAQ had a, September was not pretty for the NASDAQ 100, which is, they're mostly non-financial and they're most technology oriented. And this is where we hit the Bollinger Band. We came down. The support was in the lower band of Bollinger Band, and we also hit the 100-day moving average. Now, the band, as I mentioned, actually the band is narrowing. So that's like almost as far as the movement of the totality. But the daily movements, when you look at these candles, let's just compare what happened, let's say in August. When I look at the size of these candles, you can see nice trending, smaller candles. Since September, these are just a daily movement. We're getting much bigger candles as far as the movement during the day. So although totality, the volatility looks less, during the day we have much more volatility. And we can go back and you see this is what was happening in March, and then once we bottom April. After that, we've had really nicer, trend with smaller, and it happens it happened in Russell, but it also, you will see, like I went back on a weekly, you can see much. Again, we in a weekly on NASDAQ, we hit the upper Bollinger Band in September. We came down, hit the 18 weeks, and we're having a nice technical bounce. So there's a good chance we will go to the upper band, and then we'll see what will happen. But the volatility, what I'm trying to say is the volatility is with us. And the same thing with the, you look at the S&P 500, this is the futures, E-mini futures. I want to look at these candles. They are small candles, narrow, nice trend. We are above the 18-day moving average, which has been fantastic. I mean, from the beginning, we went down, we had the support at 100. We came back and we've been, but here, when there was some damage done, again, support at 100. We came back up. And again, I see the candles are getting a little bigger, and that kind of tells me there is some volatility with us. Now, the Dow Jones, the YM, which is the Dow Jones future, you can see that has been a nice movement again. Every one of them, we hit the 100-day moving average, and we had a nice bounce in the last 2 weeks, as you can see. Now we're hitting the upper Bollinger Band, and we are embedded. That means we are not overbought. There's momentum still with us, so I would not short the markets at this with the YM, but I would just watch for we'll see which way the expansion will go. The 10-year note, if you recall, we've had this really narrow squeeze here, and then eventually, it just broke down, so the rate went up a little bit. So we are right under the 100-day moving average. So, but it's still, again, it's a controlled environment. So the bond market is telling us the risk is on at this time. And we want to continue with the volatility, which I talked about, the VIX. So although the markets are up nicely, a lot of them are close to, S&P is trying to get back this all-time high. The VIX hasn't had it, although we've lost, especially on Friday, which was a really nice update, we're still above the support line. And it is the volatility is still with us. So in that sense, we are not really out of woods yet. Basically, the VIX is telling us that, again, with the election, you can understand, and then we can see that there is more volatility would be ahead for us. And it's interesting because last class that we had, we talked about straddles, which plays on the volatility. So it looks like, it's a better time if you want to be more of a buyer of the volatility rather than seller of the volatility, unless you play weekly or if in the long term, just watch for that, because it looks like there are going to be some more volatile days ahead. And the dollar has been the key. As you know, we had a big sell-off in dollar, but the dollar affects a lot of things. And what happened was, like you see, the dollar stabilized, had a nice run. And the story with dollar is that it seems like, again, with the presence of, Biden and Harris, what will happen is the dollar most likely will be weaker, and that's where the international markets will be more attractive, commodities will be more attractive. But when there's uncertainty, that's where the money goes. Like, for instance, Tuesday, this is where what happened, for instance, on Tuesday when President Trump came and said, no deal, and tweeted that they're not going to talk and they're going to wait till after the elections. What happened was the dollar had a nice bounce, and then you notice gold and silver came down. They sold off. So, but on the norm, it seems like the markets are resigning to the idea, and that's what's important to watch the dollar. So, basically, dollar has become the as far as the risk, it's becoming the hedge. It's becoming, whether being risk averse, is the place that money goes once there's concerns. So with that, you can see the dollar got weaker on Friday, and look what gold did. For instance, gold again bouncing off that 100-day moving average. We hit the lower Bollinger Band, and that was a nice move in gold. So it broke above the 18-day moving average. So this was a resistance, but Friday, again, because of dollar and because of the talks of positiveness of, all right, the stimulus talks are back. So the same thing happened with silver, for instance. Again, the 100-day, the lower Bollinger Band, and we broke above 18-day. And then Bitcoin also had a nice day. You can see that the Bollinger Bands are narrowing, but we are above the 100 and 18-day. Let me talk a little bit about oil, because if you can see, the oil, obviously, who could forget this debacle in April, if you recall, but we've been stabilizing. The only thing is, other commodities have been going up, but the oil has been really in a very narrow range, but you can see there are big candles again. So oil is at $40.60. Last week was at 37. So what's happening with oil? Well, there's two things. Number one, obviously because of the, we talked 3 weeks ago about COVID situation, what is happening? Obviously, again, by the way, this is a weekly chart, so you can see, in September, end of September and beginning of October, we had this resurgence of COVID in Europe, even in the United States. There are more cases in South Korea. So obviously that affects, again, the psychology of people don't want to travel. They don't want to stay in the hotels. They don't want to drive or going to other places. Tourism gets affected. So basically, there's less demand. The other thought is that, again, the markets are thinking that goes back to, again, if there is a Biden's presidency, what will happen is Iran will be in play. basically, as you know, President Trump has taken a hard line against Iran. So Iran is really cornered. I mean, their economy is in shambles. They cannot sell their oil. So if you have the presidency of Biden coming in, Iran has been really stopped from exporting almost 2 million barrels a day. But the 2 million is, let's say, if it's like even 1.5 million, if we're going to do. So there's going to be more supply. So I think that's why this area that about $40 has been the area of resistance. And it looks like the market is resigned to that. Although, again, you see a lot of volatility going on. When I say volatility, you see these big candles. So it's not, it's a nice orderly movement. But, and also we have this 50-day moving average at 42.59 is really, has been a big resistance going back. When we go back on, these are the weekly, going back all the way to the beginning of the year, as you can see. So here again, so I believe those are the two major factors. Obviously, the other thing is the energy sector is being affected, especially the traditional energy sector. Although, again, Biden is going to be supportive of, the energy company, but the big thing is alternative energy, the green energy. You can see the from solars to wind, they have been up almost 130% or so since the bottom. So that's where the numbers are looking at. Let's say ETF like TAN was up nicely last few days. So basically, these are the things that I think that's what the market is seeing as far as the oil goes, for instance. Last week, our commodity of the week was copper. We were right around here. So you can see again, commodities like copper, which is more of an economic sensitive, we call it Dr. Copper. That $3 is a huge number. Usually they look at the $3 and used to be $4. $4. When you have a $4 and more copper, the global economy is pretty healthy. When it goes under $2, it is pretty nasty, and there's a lot of problems. But when you go above the $3, there's activities that's showing that there is more health coming. So we are in a really crucial point, but that's what the copper, after that, one of the biggest drops I had seen last week. Right after that, we had a nice bounce. And incidentally, if you believe it or not, this coincides with President Trump's announcing, I think it was like 10:30 or so, the market dropped before President announced that he has COVID. As they said, so copper was the first market really dropping big time. And this was one of the stocks of, Freeport-McMoRan, the largest copper producer as far as purely, and they've had a nice run since last week that we spoke. So I'll just share that with you. The other things I look at is the internals, and we look at how many of the S&P 500 are above their 200-day moving average. And we can see June was the highest since March, and then we just broke above that. Again, with this, that means that 74% of the 500 stocks have broken above their 200-day moving average. In this situation, let's say about 375 companies, or it's close to that, 380 companies. So that's usually a good gauge of the health of the markets in S&P as far as the stocks are going up together. What I look at is the extremes again. When it's above 80, 85, that's a warning sign. When it's below like 20, that's a good buying sign. So that's what I thought, just revisit that. And also want to look at the New York Stock Exchange composite, that much more number of stocks. As you can see, we are going back where we were beginning of September. The other thing is that the financials haven't done anything, and now you can see there was a little movement in the financials. We are getting back to the resistance at 25.50. One thing we will talk about, there's a lot of earnings the earnings season starts next week for the financials. So you will see quite a few companies. So that's going to give us a little more direction of what's going to happen in next few weeks. Because as I mentioned, because of the government rulings, the financials cannot, the banks, you cannot foreclose the houses, you cannot get mortgages. So we will have a better guidance what will happen with their announcements. So now we looked at all the when we looked at all the sectors and all the indexes, everything was looking nicely up to the right side, except you can see we are in the energy XLE. This is not a good looking chart. So even though we had a nice run up for last week, but we were really beaten up. So we tried to break above the 20-day exponential moving average, and we got rejected on Friday. So just a food for thought if you're playing energy sector. Last but not least, I want to look at the airlines. So as you know, with no stimulus package, what happened in October 1st, the markets already had taken into account now. Either there's a hope, there's something, they've been asked not to furlough everyone. And so we had some movement even in airlines. So even though, again, there was, you can see when President Trump came and said no deal, they dropped, but not as much. So we are right above the 20-day and 50-day moving average. Okay. Last but not least, we've talked about corn. It was one of our commodity of the week, and you can see it has its own world. It's been just going up nicely. When the trade deficit got wider last week, so we are importing more than we're exporting. One of the only positive exporting that we've had was the ags, mostly like soybean. We were really positive in the soybean. So it looks like, again, that's how the numbers are coming. So that's what the corn has done well. Okay, let's dive into the lesson of the week. I thought, again, I thought maybe it's a good idea to share 2 or 3 lessons every week. So let me start with the first one. And oops, that's not the first one. This is the first one. So this is a chart of the last 3 days of, and these are the 5-minute chart of the S&P 500. These are E-mini, which is the futures. So please don't, all these lines, you will see what we are talking about. So this is Wednesday, this is Friday, this is Thursday, and this is Friday. So I just want to show you the 3. And what is our lessons for this week is, if you're a futures trader, it works really, it's very beneficial to know what you want to do the rest of the day. But even if you're a day trader, or if you're investing only in stocks or playing options, I think the first hour of the day, and this is from the hourly, it dictates most of the time what will happen. So it's the first hour and the last hour. Last hour is the professionals. So that's why I don't trade too much toward the end of the day, because I know I cannot stand in front of and I cannot compete with the professional, institutions. So what happens is, the lesson for today is the first hour of the day, for the first 16 minutes, shows you the high or low of the day will be actually placed in the first hour. 80 to 85% of the time it works. So a lot of times, actually, you will see it's a range bound in the first hour of the day. So let's say I woke up and I'm, we're in California, it's like 7:30. Basically, I haven't done anything. I go back, and this is Tuesday. So this purple line, so what I did, first of all, we had this big gap. One gap, we had another gap on Thursday, and another gap on Friday. As you know, we talked about gap play last week, but I mentioned, you want to make sure it's not professional. It's like if it's over 1%, you don't really want to play. Majority of time, you can fill the half a gap. But what's happening is none of those days, including Friday, they recovered. So Wednesday, try to get close Friday, IWM got covered, the Russell 2000, S&P came close to half a gap, but not even that. So this was more of a professional. Again, the money was coming in. So this is on Wednesday after, again, President Trump had announced on Tuesday, the money, came back. There was the movement as far as the markets go. So this purple line is the low of the day. So we go from 6:30, this is actually 6:30, and we go to 7:30. So from this is 7:30 to 6:30, I drew the low of the day, and this is the high of the day. So what we did, we struggled right around all day. This is the whole day. And as you can see, once we break above the high of the day, then usually we either stay or try to come and kiss it, go inside. But the low of the day was in place. And the reason I say that is, like, if you started saying, oh my God, I'm going to short the market here, I'm going to short the market here, or I'm going to buy put options because I think if the market is going away from you, even if you want to do put options, for instance, don't go below the no out of money. So that's what I want to, again, emphasize that, again, the 80% of the time, the low or high of the day is the first hour. Let's go to Thursday. Again, we gapped up. This is the first hour of the day. This is high of the day. This is low of the day. We breached it just temporarily, just once. And then, as you can see, the market just was range bound. We had a nice gap up, and we stayed within that first hour of the day, and we just went back and forth in a narrow way. But that was on Thursday. Friday, again, this is the first hour. We had the high of the day, low of the day, and then we broke above the high of the day, and we just played around. And you could see the high of the day, the high of the first hour, it became your support. So if I'm a trader and I'm doing the futures market, every time the market comes and hits the support, I look at some other factors, but I think it's the odds are, again, it's all about probabilities, right? So it'd be a good scalping maybe and taking some points. The same thing here, the same thing here. You can see we finished the day nicely up. So I just thought, again, this is if you ever got the futures market, but even if you want to buy some big cap stocks, because the markets usually follow, the stocks usually follow the markets. So this is just a food for thought. So you can use that, the first hour trade. The second thing, we've talked about this, but it's the unusual option activities. I think we've talked about it 2 or 3 times before. We learned about the sizzle index using this is from Thinkorswim. So I've been getting some unusual option activity, large volumes coming back. First of all, out of money, going and this is on Petrobras. This is PBR. Again, this is no recommendation, just sharing an idea with you. We're going back to going to 2021. There's things are happening in 2022. There's 10,000 volume. There's lots of volume coming in. So it kind of piqued my interest. I used to trade Petrobras many years ago. I think 1 year was one of my top 10 choices. And they're, the Brazilian almost national oil company. And so I thought this is interesting to share with you. Just do more investigation to see what happens. So just to go back, the sizzle index is not that huge. It's under 1, so really doesn't interest me on this. But what interests me is there's a 47,000 calls. This is from Friday. And this happened on Wednesday and Thursday. So I'm looking at it. On Friday, there's 47,000, and then puts are only 19,000. So that doesn't mean much. All it tells me, there's obviously 2.5 times movement on calls to puts. What interested me was there were a lot more at the ask side of calls, and there were more on the bid side of puts. So that piques my interest. So that's what I want to do, more investigation. And what I want to just share with you, what does that mean, is just for your understanding, options are bullish when the call is purchased near ask price. So what I was seeing, I see these calls are buying, being on the bidding on the ask side, but the puts are near the bid side. So they look at both sides. It looks like their activity. So it seems like there's bullishness as far as something someone knows, not in the near future, but in long time to come. I mean, and this is an energy stocks, by the way. So I mean, you figure it out, and I will show you. I'm going to share with you um, their um, their charts. See, there's nothing to write home about. But again, this is just, you become like an investigator, you're a researcher, and you can find some ideas like this and just dig into it further. The other thing was, for me, interesting was that it was really in a distant future, and I want to know why, but also it was way out of money. And I want to know what was happening, that there was like $13 call. So these, again, it piques my interest. Just for your information, again, the number of contracts, that's the, when it's, again, we talk about volume, that's the daily activity, and open interest is when it's not closed. I call it inventory. They're sitting there. So there's a buyer and a seller. So I just thought I'd give you a little information just for your records to understand. Whoops. So look at this chart. I mean, there's nothing interesting here to say, boy, this is a great value. There's a beautiful chart. We are under 200, under 50, under 20. Haven't been able to break above it since September. Just briefly went, and then we had doji and just got rejected. And there's nothing except, again, like the MACD is trying to cross over, but that's it. So other than that, there's nothing. But it's, put it on your watch list, see if there's anything happening, do a little, again, more investigation, and see why somebody is buying big contracts in the future. So I just thought that's another lesson. The third lesson was about, so I want to go back with look at the VUG and VTV, which is the Vanguard growth versus value. And as you know, I mean, the whole story has been the growth and the technology and all the big caps, I mean, for the last 9-10 years. So value has been out of favor for many reasons. The way we define value is completely different than it used to be. You know, we used to look at the times of Ben Graham and Warren Buffett. It's the understanding has changed. It's not just the price to book. It's not about price to sales. There's a lot of other factors because of the value being so out of favor. It's kind of self-fulfilling prophecy that they keep going down because they're just more out of favor. So people, regardless of what value, they just want to sell it. So, but the interesting for me was this is the lesson. It's not just about the growth versus value. This is a weekly chart. I want you, again, whether you're a technical analyst, you believe it or not, look what happened in March. We went to, this is a 200 weekly. We respected that. The following week, we bounced back. We broke above the 50 week. We broke above the 20 week, and we've stayed above this 20 week, and we've been respecting it. So that's, again, the lesson that, again, these moving averages, they mean something. If not for us, at least for the institutions and algos, the trading programs, they respect this. So that's one. And the other thing is, I want to show you that the value, as you can see, we've been really flat till now in the last few weeks. Now we're getting a nice bounce. And again, it looks like the market thinks if the presence of President Biden, if there was happening, it will favor more value, which they are industrial, they are basic material, they are more of a, again, economic sensitive. So basically they feel because of there's going to be so much stimulus, that's where the, the, the value will do better than growth. So, and in this situation, again, we broke under 200, we couldn't do anything. And finally, once we broke above that, as you can see, we got rejected at 50-day. We came back, found support at I mean, these are the weekly, by the way, 200 week, and we just been back and forth. Now we have stayed above 20, and let's see next few weeks, let's see if this will get confirmation to go higher in the value. But the reason I just want to share with you is like the moving averages are respected. So again, the 3 lessons, I hope you review them. And hopefully you find them valuable. The first hour of the day, the sizzle, you know, how the ask and bid work with the options, unusual option volume, and also with the moving averages. Okay. Let's talk about Trader Week. I did have few. I only can bring you few of them because some of my trading platforms, I don't use charting. I use charting on TradeStation. I love TradeStation's charting. So that's the only one I can basically use for some of our confirmations. The other ones I don't use, and they don't. So it's just the confirmations on other platforms. I just use them for Dome. I always like to have alternatives. So you don't want to have only one platform or one broker dealer. You want to have different ones just in case something happens. You know, Robinhood had their own problems a few times. Thinkorswim had their problems a few times. So you just don't want to be captive to one. So that's the reason. But so the ones that I have is mostly, they're actually all from my TradeStation. So let me start with the first one, which is, this was the S&P micro trades that I did. And the theme was, and that's why I want to share with you, I don't recommend doing this because I went kind of, it was more of an intuitive. I knew how much money I will lose. So I was willing to take the chance. These are micro. So this is Monday. As you know, I don't like to trade on Mondays. Basically, it's against my philosophy because for day trading. But if you recall, Monday, the markets are up nicely. And what happened was because, you know, the thought was that President Trump is back, you know, his health is not as bad. Anyway, the stimulus talk is on the table. They're talking over the weekend. So there's something called Tuesday turnaround. So turnaround Tuesday we call. So what I did, I was under the belief that the markets, the ticks were not giving me positive, you know, for this movement. So I gradually started buying few contracts at a time. And I finally had the 10 right around here. It was about 12:30 or so, because the markets were close to closing, and the next day was gonna, you know, it was Tuesday. So I finally did, I think I had like 20 contracts I had total. Now, what happened, as you can see, I'm shorting the market. So as it's going up, I'm losing money, by the way. But that was my belief. So that there would be a turnaround Tuesday. Well, I was a little sweating. I mean, this was okay, but these, I'm out of money. You know, I'm losing. This is Tuesday morning. And then this is, I think it was right before 12 o'clock that President Trump tweeted. And I think maybe he had a lot of shorts. So that was a time to do this, I guess. So kind of he saved my day in a sense. So that's when, you know, I put targets, and immediately I had them and everything got covered. So I had 0 left. So that was one. I mean, obviously could have made more money, but I had my numbers, you know, around. Basically, I did the analysis that was the time to get out. So this was one of my trades, and that was, we call it turnaround Tuesday trade. On top of that, so I wasn't satisfied just by doing playing the market with the futures. I also did options. So I bought put options, SPY's put, and again, did okay. So again, this is when the the tweet came and we got out of it. So that was good. The other thing is I spoke, I think it was a couple of weeks ago, we saw that insiders buying this Liberty Latin America. So it's a communication company in Caribbean, Central America. I did emphasize this was not a long-term play for me. What it was mainly, it's again, short-term. Based on that insiders, I wanted to know why they got in that time at that price. So I want to join them. So I bought, it says 820, I averaged about 827. Some of them I bought 820, and basically last week I kind of shared with you, I want to get out of half of them at 925. So this trade is more about discipline. So it's not like I feel this is going to be a Tesla, we're going to make 1,000%. I just had my goals, I had my targets, immediately they were in. So as soon as we hit that at 925, I was out half of my position, and after that, I've been scaling out. As you can see, we got 1110. I got about 100 more shares left. I also have a few hundred shares left in another platform, which I've been also using. So the idea is, again, this is not about either getting out too quickly or getting out too late. It's all about discipline. So again, there was a 50%. I was happy to make money on 50% of my position. And gradually after that, I will just take 100 shares at a time. So I got another 100 shares, and I can make it, use a run, and I will put a trailing stop. So I could even do a break even, but as I go up, Monday probably I decide where I want to put my trailing stop, be under this gap maybe, or, it all depends. It's not a lot with my other one. So anyway, that was another trade we talked about. And then the other question is, so I would do different, so I would do E-mini. I try to focus on one, but sometimes I see opportunities in one that I don't see in another one. So this was my regular E-mini S&P. This was on Friday, actually. I just quickly, again, I see if you notice, oops, if you notice, sorry about that. So let's, if you notice, I tried, these are discretionary in that sense that I put my targets right around, like these are moving average. So I tried to get out when it's turning around. So we got out right around when it started going back up. So basically I try to use, again, very quick. So I was in another, so this was Russell 2000. Again, I got out before I turned around and moved up. So these are all futures. I was just moving back and forth of different, between Russell 2000 and S&P. Those are my two favorites. So the last but not least, I think, of the trading was a few weeks ago. I think we talked about the unusual option activity in Marvel. There was we looked at there was a resistance at about $40, and you could see it came down, and it was supported at 37, and now you can see we've had a nice movement in Marvel, and that's nice to see. And all right, with that in mind, I think in our last class we talked about maybe every week I can just give you some ideas about, because quite a few of you use the squeeze with that Thinkorswim, and because it's available, so I thought every week maybe I can give you some candidates that you can research on your own. So I just give you the list of my screen, and these are to do a lot of choose my criteria. These are all from S&P 500. So with this environment, I thought it would be good to have a lot of liquidity, especially if you want to play the options. So these are the most liquid stocks I found. And again, you'll have access to a copy of the slides. So these are I think I chose 14. top 14, technically they looked good and the setup was good. So these are all in squeeze from Kansas City Southern to Charter Communication. So it's just something that you can actually follow up yourself, just some ideas to start your Monday, so you can, you have time hopefully on Sunday to do some research using Thinkorswim. So that's that. And then last but not least, I like to look at the expected move in this situation. We start with the S&P. It's going to be up about, so the expected move for next week is maybe around 72 or so, less than actually last week. One thing you have to remember is, again, Monday is a Columbus Day, so the bond market will be closed. So the volume might be lower than normal. So just a heads up. So you're looking at the, as far as S&P goes, we look at the 35.49, the upside, 34.09, the downside. Now, interesting thing is, you can see we've been very orderly with the S&P, trying to respect the boundaries, except this week. This week, we went higher than our boundaries. So that's why I'm talking about the volatility. You have to remember, markets are efficient. They try to be efficient. The market makers, they want to collect their premiums. They want to price it correctly. So when you see something like this, it's a little, not concerning. It tells you that the markets are becoming inefficient. So just be ready for any move, because we could be going up as far as the upper boundary, but the next week it could easily go to the lower boundary. So if that's the case, just don't think it's like one directional. And I just decided to do the spiders. Some of you don't do the futures. So in this case, 353.82 and 339.38, those are the boundaries. So let's look at the IWM. Last week, I talked about how IWM has not respected its boundaries. Well, lo and behold, last week, I want to see this. So this is 1 sigma. We went like 2.5 sigma outside, so almost like, well, 1.5 sigma outside of 1 sigma. So it's like 2.5 standard, almost 2.5 standard deviation. So IWM for the last few weeks has not respected its boundaries, in a sense, like a rebel teenager. So here we are. And that's what I thought is interesting to know. The same thing now with the QQQ. It has been pretty orderly. Last week, again, we finished above the boundary. So each one of them, they've had the same thing. XLF finished a little bit above the boundary. The gold respected its boundaries, so it finished under, and silver was a little bit higher. Silver had a really nice Friday, so that was good too. Okay, so that was the expected move, and I thought we finished the week with what's happening next week. As I mentioned, next week we're gonna have the Columbus Day on Monday. Then we have the consumer price index and the retail sales on Friday. There's not a lot of other things, except everybody's looking, is there going to be any more talks, or is it they're going to come to any conclusion with the stimulus package? So we'll see. And then earning starts. So here we are. So you can see there's a Citigroup, and then we got Morgan Stanley, Bank of Mellon. So we got a few financial institutions, and then we got Schlumberger and energy, and some industrial, hospitality, and also in the healthcare. And it will be interesting to hear what the United Airlines is going to come out with. Okay, so basically with that, let me see how we're doing. All right, so I think we are all set. So Sean, we can actually stop recording and then maybe open for the questions if you don't mind. Thank you very much.